Well, after 4 sessions of later sell-off in the Nifty index, today we saw some later buying coming in, which restricted the losses on the benchmark index to about 0.2%. Agam, yesterday you were very upset over the lack of volatility in the markets. Are you happy today? And I'm assuming there's been at least some movement in the India VIX.
No, I'm not really. We've just seen about a 3% uptick in there. Okay. And the fact that the VIX continues to trade below the mark of 11, it's been a continuation of not just the 1 week, but this is something we've seen over the past couple of months. So there really hasn't been a considerable change in the way the VIX has been panning out.
Neeraj, we cannot only blame the inclusion of China A shares in the MSCI Emerging Market Index for the kind of fall that we saw in the early trades, because even European markets are trading significantly lower, and then comes a later recovery. I don't know, your thoughts on what's going on?
Well, frankly, even if you look at the recovery, it's hardly a recovery. I mean, a statistic that we noted and we pointed out in the morning as well, that the Nifty has been in this range 25-30 odd points now, the last 22 sessions now.
Right.
Whole month of June, I think we've not moved beyond a 40-point range.
Right.
So it's a very, very lackluster market. We've been all talking about how, because of the way the valuations are, is there a chance that we'll get a time correction? It's too soon to call that because it's only 22 days. But hey, over a 3-month period, if we have only 300 points, 400 points, if that is indeed the case, then it could well be that. But today somehow, I mean, just call it a gut. It just seemed that the market now seems to be getting ready for maybe a bit of a pause or a bit of a fall down. A lot of factors that may contribute, right? The China news is one. Yeah. I don't know if the spate of farm loan waivers continues, and we've had 4 states now. If 3 or 4 more continue, and that puts a bit of a lid on how people view the state finances, then that's a problem too. Right. So that is something that I think investors need to by and large watch out for. I doubt that there will be too much of a deviation on the flows picture, so we'll probably have some outflows, some FIIs, some uptick from BI's front as well today. But hey guys, that's the market. I'm sure you'll have a lot to talk about with regards to CDSL as well, because while the market was lackluster, Absolutely. It was anything but lackluster.
Yes.
150 times as of now.
160 times is the final number, but
which beats DMART also.
The HNI number is considerably high.
500.
Yes.
And that's not even 5 p.m. It's as of 3:40 p.m.
Yes.
So I think it'll improve as well.
Right.
Which also means I don't know who's going to end up getting all that allotment, but
probably no
yes,
one.
at least the primary markets continue to buzz.
Yes.
Thank you very much on that note, Neeraj. Agam, what are the F&O trends throwing up?
Again, as we mentioned, what we're looking at is a change in the open interest in the 9,700 call, and we're actually looking at an increase there based on maximum open interest. Let me show you where it is. It's between the 9,500 put and the 9,700 call, so nothing changes there. The range remains in that 200 points. We haven't seen too much change there, but again, the fact that we're looking at some market consolidation showing up. It's been another quiet day of trade with just like a marginal retreat of around 20 points. We're going to have to wait and watch as to what investors are bringing to the table.
All right, on that note, let's bring in our guest, Mr. Deepak Jasani, the Head of Retail Research at HDFC Securities. Thank you for joining us, Mr. Jasani. I have to start with the mandatory question, which is on the direction of the Nifty market, the Nifty or the Indian indices. Where are they headed? Or are we likely to see some sort of time-wise correction? What is the view that you're taking?
Yeah, so we have seen markets remaining range-bound for quite some time now. A lot of people feel that valuations are expensive. That is why follow-up buying is not happening at higher levels. On the other hand, there is a lot of liquidity floating around. So at dips, a lot of money, fresh money is coming into the markets. We all know the mutual fund inflows. More than 10,000 crores in May, coming in May, which is offsetting the FI outflows. So broadly, corporate earnings are yet to catch up. There is hope, there is fear, there are challenges. There is fear about GST, how it will impact. There is hope about monsoon, how it will sort of drive up the rural incomes and in turn the corporate earnings. So everything is offsetting the other at this point of time. But net we still feel that in this calendar year we may see higher levels. Whether it happens after a reasonable correction or whether we go straight, I am not so sure at this point of time.
Are you concerned about valuations considering your expectations on earnings in the next couple of quarters?
Valuation wise, if you would have noticed, Nifty has barely grown in the last, Nifty or EPS has barely grown in the last 3 years.
Yes.
So everybody is in some sort of a perennial hope that next quarter will be better or next year will be better. Now a lot of things seem to be falling in place for India, for Indian corporates. So whether, so we are hopeful in that matter. So in the extreme near term, we seem to be fully valued. But if you have a slightly longer view, then maybe you can do your sipping or staggered investment in the markets.
Right.
Okay, are you worried about the farm loan waivers, and has that in any ways changed the position that you have on banking and financial services stocks? I mean, two things happening, of course. On one end, you're having these farm loan waivers which are being announced. On the other hand, RBI is fast tracking this NPA resolution. So if you had, again, at the current levels, if you had to take a pick between private and PSU banks, where does your preference stand?
So this is again the classic case of politics versus prudence. So RBI has been doing a lot of good things all this while, but political compulsions have sort of resulted in this kind of waivers.
Right.
And whether this will be followed up, we have seen today also some other state announcing farm loan waivers. So it is going to have a sort of compounding and a cyclical effect. So, and we also hear reports that the union government may announce a blanket loan waiver. So now currently the institutional investors are quite sanguine, in a good mood to forgive a lot of things. But if this spreads and if it takes a bigger proportion, then probably they will rethink about the near-term attractiveness of Indian markets.
Right.
So there lies the danger.
All right. So if you talk about the Nifty movers today, Agam, the entire FMCG pack that stood out in trade today, especially led by HUL, which rallied 3% to fresh record highs. You also saw Nifty FMCG index surging more than 200 points, which is the best sectoral index performer. So even your names like Britannia, Colgate, Emami, Godrej Consumer, all of these rallied more than 1.5%. On the other hand, you had oil and gas stocks, which are weighing on the index. You have ONGC, you have GAIL, BPCL, all of them losing anywhere over 1.5%. Of course, there are also some reports which said that the merger of HPCL and ONGC was likely to be announced soon. Reliance, of course, stands out as far as your oil and gas names are concerned. But that brings me to the question on FMCG. Your thoughts on FMCG, especially given the time that they do start seeing some action, in the prelude to monsoons.
Yeah, so again, a lot will depend on how the monsoon pans out in terms of its spread and intensity. Currently, there is a lot of hope that this time the monsoon will be quite good all around. So in case that happens, then probably we will have a good time for FMCG players. But of course, there is an interim disruption due to GST. So that I think slowly it will get discounted. People will sort of expect less in terms of results for Q1 and Q2 from these companies. So even if they underperform, they will be forgiven, and we will all look forward to the H2 of FY18. FMCG currently could be again taken back as a defensive play. So in case you are worried about the overall valuation, then maybe you can park some portion of your money into FMCG.
Actually, I have a question on the information technology sector. Now, there have been some contrarian voices which suggest that it is not a bad time to start allocating some funds towards the large cap information technology players. What is your opinion in this case?
Yeah, IT sector has undergone a lot of structural issues over the last few years. We all know about that. Now, again, we'll have to segregate the two. One on the larger ones, the Infosys, TCS, Wipro and HCL technologies of the world, and on the other hand, there are some niche players. So among the larger players, even today I think one of the brokerages has downgraded the earning estimate, and but has retained the buy on that. This apart, the larger players are facing problem about revenue growth. There are talks about layoffs and all. So in the information wise, there is a lot of negativity around. So if you are a contrarian player, and if you think this again, IT could be a defensive play going forward. This is my feel currently. as you said, some people are finding value in it. So that may prove out to be true. But then your expectation about returns should be sort of limited.
Right.
You cannot sort of expect 20% and 30% per annum return in those shares.
Right.
Okay, so gains in IT may be capped is what he's telling, and that was also a question that we had from our viewer who was asking about your view on Avenue Supermart and Infosys. I'm not sure if we can talk about individual stocks.
So Infosys, I think, gets covered in whatever we discussed
Right,
earlier.
Avenue Supermarts, which is
Again,
DMart,
that
or
is-
retail
is-
stocks.
yeah.
broadly.
So that is a much fancied stock. We don't have a coverage on that, so I would refrain from commenting on that.
Fair enough. So, speaking of Avenue Supermarts, let's address the broader markets and the kind of gainers and losers that we've seen. Today, we've seen some weakness in LSE India, which has declined by as much as 5.3%, followed by Videocon Industries. Verity Organics looking at some amount of profit taking after a hit nearly 1,000 yesterday. Magma FinCorp, Astral Polytechnic and PTC India Financial also declining to a certain extent. Let's talk about the gainers too. We have seen Bhushan Steel, Dr. and Upper Circuit of 20%, Amtech Auto also up 10%, Gujarat Fluorochem up 7.3%, GMR Infra and GVK Power, each of these counters gaining well over 6.5%. Remember, the entire Amtech group has been buzzing in trade for the second straight day, gaining. GMP Auto, one of them up as much as 6.2%. So speaking about the broader markets, are you keeping an eye on anything in the mid-cap space right now? A theme that you may like to play right now?
Mid caps we have liked in the recent past auto ancillary stocks.
Okay.
And certain NBFCs. So these two themes, I think there is some value left there.
Right.
Those themes can be focused upon.
Right, there you go. You can keep an eye on auto ancillaries. But with that, I'd like to thank you, Mr. Jasani, for joining us. It was a pleasure speaking with you.
My pleasure.
And as for you guys, once again, we will bring you a lot more on stocks, but we're signing out for now. We will see you tomorrow. Stay tuned and remember, quit and we will keep bringing you more.